Here's the complete script for the YouTube video. Imagine waking up one morning to find your investments have plummeted by 20%. The thought alone is enough to keep you up at night. But what if I told you there's a way to invest in the stock market without the stress of stock picking? In fact, Warren Buffett, one of the most successful investors in history, recommends this strategy to beginners. It's called index fund investing, and it's the key to building wealth without losing sleep over market fluctuations. The problem with investing in individual stocks is that it's a game of chance. Even experienced investors can't consistently pick winners. The odds are against you, and the risk of losing money is high. Not to mention the time and effort required to research and monitor your stocks. It's a full-time job that can be overwhelming, even for seasoned investors. So, what's the solution? Index funds are a type of investment that tracks a specific stock market index, such as the S&P 500. By investing in an index fund, you're essentially buying a small piece of the entire market. This approach provides broad diversification, reducing your risk and increasing your potential for long-term growth. Warren Buffett has repeatedly recommended index funds to beginners, and it's easy to see why. They're simple, low-cost, and effective. Let's take a look at some examples of popular index funds. You may have heard of VO, VTI, and SPY. These funds are all offered by reputable companies and track different indices. VOO tracks the S&P 500, VTI tracks the CRSP US Total Market Index, and SPY tracks the S&P 500 as well. The main difference between them is the fees and the index they track. VOO and SPY are similar, but VTI provides broader coverage of the US market. The choice ultimately depends on your investment goals and risk tolerance. So, how do you get started with index fund investing? The good news is that you can start with as little as $100. Many brokerages offer low-cost index funds with no minimum balance requirements. Here are the action steps to get started. 1. Open a brokerage account with a reputable online broker. 2. Fund your account with at least $100. 3. Choose an index fund that aligns with your investment goals. 4. Set up a regular investment schedule to take advantage of dollar-cost averaging. 5. Monitor your portfolio periodically, but avoid making emotional decisions based on short-term market fluctuations. In conclusion, index fund investing is a simple and effective way to build wealth over the long term. By following Warren Buffett's advice and starting with as little as $100, you can take control of your financial future. Remember, investing in the stock market involves risk, but with a well-diversified portfolio of index funds, you can reduce that risk and increase your potential for success. If you found this helpful, subscribe and hit the bell. Next video, how to create a budget that actually works for you.